Testing, 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 testing. All right, everybody, good afternoon. Welcome to the Fringe Benefits training. If you are just joining us now, I am Amanda Mosley, and I am the tax specialist here at TempWorks. I know it's a holiday week, so we're just going to dive right in to the definition and key points. A fringe benefit is a form of pay, such as property, services, cash, or cash equivalent, in addition to regular pay for performance. Any fringe benefit you provide is taxable and must be included in the recipient's pay unless there is a law specifically excluding it. Benefits in the form of cash are always taxable and usually taxed at the supplemental rate of 25% or 39.6% if the employee earns over $1 million. I'll stop right there and just make a quick note. Everything that we are doing today is going to be from a federal level. Those are federal supplemental rates. Every state differs a little bit, so because there's so much room there for variation, we're going to be talking about everything from a federal level today, and we can deal with the states on a case-by-case basis as you're calling in and getting those set up. Alright, so the taxable non-cash benefits can be reported and taxed on any frequency up to annually as long as the subject amount is reported by at least 12/31. So that means that you can report your benefits weekly, monthly, quarterly, annually, anywhere in between. You can report them as often or as unoften as you like, as long as it's at least once a year and by the end of the year. Generally, fair market value is used to determine the amount taxable for non-cash fringe benefits, and the fair market value is determined by the amount the individual would pay to purchase their benefit on their own. Your responsibilities as the employer are to identify the value of the non-cash benefits, determine whether benefits are taxable, and thus withholding is subject to, and then the tax is subject to withholding, withhold and pay taxes associated with the benefit, report the benefit and the subject taxes. Okay, this is an important slide. I want you to pay attention, especially to this side, because we're going to refer back to it quite a bit. This is going to give you just an example of how fringe benefits affect net pay. So I have an employee that is claiming single zero on his W-4, and he makes a weekly salary of $500. I have two examples here of paychecks. One without without any fringe benefit, just the $500. You can see that his net pay is $401. And this check over here, where I'm giving him a $100 fringe benefit. I'm reporting a $100 fringe benefit. So the taxable amount is $600. You can see the taxes that come out of that. However, this fringe benefit here, the $100, is not something that I want to pay the employee. He's already received that benefit. I just need to tax him on it. So when I'm deducting my taxes, I can only pull money out of the $500 salary check I'm giving him. So I'm pulling out my taxes, and you can see that I have a $20 difference in net pay just for a $100 benefit. So if $20 in net pay is the result of a $100 benefit, you can imagine the hit that some of the larger fringe benefits would be to an employee's check. Some benefits are $10,000, $20,000. If you're reporting that along with salary and just once a year and not changing that taxability or the tax amount, you could eat up all of the employee's net pay. So just be careful with that. Cafeteria plan and shareholders insurance. Qualifying Section 125 accident and health benefits are exempt. Again, note this is for federal. Employees and employer contributions must be reported on the W-2 in Box 12, Code DD. If you're not currently reporting this amount through TempWorks, please complete the Section 125 tracking spreadsheet that was sent in your year-end letter and return it to yearend@tempworks.com as soon as you can. TempWorks essentially just adds that dollar amount to the last check of 2013 so that it can be reported appropriately. S-Corp insurance is for the employees that own more than 2% of the corporation. They are not allowed to take the S-125 exemption. The amount paid for owner's medical insurance expense must be added to federal income tax taxable wages, which is reflected in box 1 on the W-2 and reported in box 12, on box 14 on the W-2. S-Corp is not subject to Social Security or Medicare and is not added to boxes 3 or 5. You have the ability to add this into enterprise on your own using the S-Corp pay codes and adjustment. If you've never used this adjustment or pay code before, please email yearend@tempworks.com and we'll get the pay code and adjustment added to your system with the correct taxability. Alright, we're going to go over some examples here of setting it up. Best practice is to set up your fringe benefit with a payroll check so that you're able to deduct the taxes. If you're not setting it up with a live check, like with an actual payroll check, if you're reporting it just separately, just the benefit, it's not actual tangible money. You're not moving money from one place to the other, so you have nothing to deduct these taxes from. So you're reporting taxes that need to be paid, but you have nowhere to pull those taxes from. So you would need to create an advance bank for those taxes. Most of my examples here are for one-time reporting. If you're reporting every week or every 2 weeks when you process your payroll, that would be set up through the employee pay setup. I can definitely go through examples of that with you on an individual basis. Most of my examples throughout this PowerPoint are one time, so for the people that just enter these adjustments once a year. Okay, setting it actually up, so you're going to go on the time card, change your pay code to S-Corp, enter in your amount in units. My example here is $10,000. And then this is overrides, and this is where we can change the taxation. So we can override the federal income tax to a flat dollar amount or change the number of pay periods to spread out the taxability over several pay periods. So you can change it to monthly. You can key in 4 and that will change it to quarterly. You're getting paid 4 times a year, or 1 for annually, and that's going to just change the number of pay periods. Otherwise, if you don't change this, it's going to default to whatever your regular is, which for most people is weekly, so I'll use that as my example. Otherwise, it would tax that $10,000 at weekly, and if you remember, my example employee is single zero, so that would be a very large amount of taxes to come out. Reminder that S-Corp is FIT taxable only. It's not subject to Social Security and Medicare. Once I know what my taxes are from this screen, I can go into overrides and go to the plus sign. So this is taking it out. We put the money in. We don't want to give the employee, we want to make sure we take it out. Otherwise, we're giving them the benefit twice. So under adjustments, you go to S-Corp from the drop down. You'll add the benefit amount that we want to deduct. Notice in step 2, amount should be reportable less any taxes to bring the net pay down to 0. So that means if on the last screen, I apologize, one more. On this screen, if I wanted to do a flat $1,000, then here I would enter $9,000 because I'm reporting I want to add $10,000 to his wages for S-Corp, but we're paying in taxes, so it's going to be $10,000 less taxes of $1,000. Put $9,000 in here, so $10,000 minus $1,000 minus $9,000 to bring the net pay to 0. In this example, the bill amount is required. This is just in a demo database. It is required in your live database. This red exclamation point indicating that it is required will not be here. It will not be required in your system. I know we went through that pretty quickly. I'm going to jump into group term life, and then I'll show you a couple more examples of that process here, so just bear with me. Group term life, usually your CPA or your payroll manager is going to give you just this flat end result dollar amount to enter on the W-2. If you have to compute it yourself, I do have the equation here, and I do have the IRS chart of how we get to the final number. I'm not going to go through it step by step. If you need help with this equation, I have examples here. a CPA would definitely be able to help you with this. And like I said, usually I see my clients just getting this end result number from them already computed. But this is the amount, not the total, not in this example here, not $130,000 or the taxable amount of $70,000. That's not what is put on the W-2. It's this number here out of the formula. Okay, now we're going to go over some facts about GTL. To meet the requirements, an employer must provide general death benefits not included in income. The employer must provide the benefit to at least 10 employees at some point throughout the year, 10 full-time employees. The amount of the insurance coverage is based on a formula, not the individual selection amount like we just talked about. The employer the employer provides insurance through a policy that they do not directly or indirectly carry. Also, those 2% shareholders do not get this exemption. As far as taxability, the IRS does put a $50,000 exempt limit. So if it's under that, it is exempt. It does not need to be reported or taxed. If it's over that, it's the difference, like we showed in that formula, that is taxable. Dependent coverage for $2,000 or less is considered de minimis and is exempt. However, any dependent GTL that is over $2,000, even $2,001, is 100% taxable. So it's not the dependent coverage less $2,000 and then the difference is taxable the way that the rest of GTL is. Once it crosses this threshold, all of it's taxable. And again, it's different from this. If you have $100,000 in just regular GTL, then you can subtract the exempt amount and only $50,000 would need to be the taxable amount put into that formula. GTL can be entered through enterprise independently by pay codes and adjustments. If you have never set up these codes before, just email the year-end team and we will make sure that we get it set up with the proper taxability. We're going to walk through this again. You would go under pay code and select GTL. I'm covering up my unit pay amount, but again, I'm using my example of $10,000. This is where you put in the taxable amount. I'm going to go to adjustments. Click your plus sign to add it. Remember that this is just one time only. This is going to be where you're entering it, once a quarter, once a year, very infrequently, just one time only. If you were to set it up on an employee level, it would be done a little bit differently. It'd be done through pay setup, but we'd still kind of go through the same process. Once you go to your adjustments, you're going to select your GTL. Select your GTL, and then once you select that, underneath you'll have your adjustment amount and your bill amount. Again, bill amount is not required. Adjustment amount is always again, bringing the check down to 0. Remember, for this one, the next one shows it, the taxable amount of GTL is subject to Social Security, Medicare, and federal income tax. So this dollar amount cannot be the same as the gross dollar amount. So for S-Corp, if you remember, I could have put in $10,000, chosen 0 for federal income tax, and then put in $10,000 for my adjustment amount. 10,000 minus 0 is 10,000. This one here, I don't have that option. I have to withhold Social Security and Medicare. So at the very least, I have to withhold $765. I have to at least put this amount in here. If I were to say, oh, I want to also withhold $1,000 from federal income tax, then when I go to my override screen in here, I would put in $8,235. I always want to put in whatever the difference is. And so you have a couple of options of getting here. I have an example on the next page here. This is paycheckcity.com. I use this a lot to compare taxation. So I can say, all right, I am putting in $10,000 fringe benefit plus $500 regular salary check. If I just left it alone, single weekly single zero paid weekly, it's wanting to deduct over $4,000 in taxes. There's only a $500 tangible check. I cannot withhold $4,000 from $500. I would not be able to withhold all of these taxes. So I just want you to really be aware of what that means and changing this frequency and reporting it on more often, or whatever I guess is best for your business. I certainly wouldn't advise you one way or the other, but I just want to make you aware of the tools that you have. This can also be done if you want to see what the regular check is. I want to know what the federal income tax would be without the bonus, or I'm sorry, not bonus. I apologize, without the fringe benefit. So then you can just put in $500 and you can see that only $70 should come out of his check. So then you can go through and just override $70 for the sum of the two different time cards. And I know that's a lot of information, that's a lot of confusing things here, but you need to determine what the federal income tax should be, whether it should be a flat dollar amount or whether you want to split it up over a number of pay periods. You have to determine whether you're going to be paying it on a check with a regular payroll amount or whether it's going to be a separate check and it would be an advance bank forward. There's a lot of things that you need to think about, but Paycheck City is going to be a really good tool for you to use to help you calculate what the taxes would be, whether you're summing up the two amounts or whether you're wanting to tax them separately and then compare. Personal use of company car. There's a couple different methods to getting the taxable amount. That's something that your CPA or your payroll manager would help you with. But essentially you're getting your personal miles divided by your total miles equals your taxable percentage. And then you would add that percentage of the benefit value, that fair market value, to the employee's taxable income in boxes 1, 3, 5, and 14. Once again, you can enter this by yourself into Enterprise by using the pay codes and the adjustments. You can email yearend@tempworks.com to have these added to your system if necessary. All right. You're going to go to your pay code, add personal use of company car, enter your amounts under units. My example is still $10,000. Go to my adjustment, plus sign. Alright, so I choose personal use of company car. I've already put the $10,000 in. I want to make sure I take it out, otherwise my employee is going to get paid that additional amount. He's already received the benefit. For personal use of company car, he's been driving around my car this whole time. He needs to be paying taxes on the benefit. I don't want to be giving him additional money and giving him the benefit twice. So again, this bill amount is not a required field for you. I apologize that it shows the exclamation point here. This amount is going to be, because personal use of company car is Social Security and Medicare taxable, at least personal use of company car gross amount less Social Security and Medicare upon that amount, if not more, because if you're going to be deducting income tax. So that's a figure that you would need to determine. You would subtract the gross amount less the taxes, put the difference in here so that the check is a wash, or the employee at least receives the net that they would have received from the just salary check if you're paying with the salary. And here's where we go over the taxes again. You can select your pay periods or your flat dollar amount here. You can alter your federal or your state. You cannot alter your Social Security and Medicare. That has to come out. Then we're going to go into de minimis. The IRS has not set a dollar amount threshold. It's still kind of a gray area. They have defined de minimis as too small to reasonably account for. That means something different to different businesses. Some examples that they provide are occasional personal use of company phone or company copying machine, holiday gifts other than cash with a low fair market value. Remember that cash, no matter what amount, is always taxable. Group term life of dependents with a face value of less than $2,000, occasional company meals and snacks, occasional company parties or picnics, occasional tickets to theaters and sporting events. You can see a theme here. If it's occasional, if it's a once in a while, somebody won a raffle to a football game, or there's a pizza party for meeting a certain goal, that is fine. If it's a regular benefit that the employee is receiving lunch every day, and that's clearly a benefit for the employee, they do need to be taxed upon that. Per diem, I know a lot of our customers use per diem. As long as it's within the IRS set limits, it is not taxable and does not have to be reported. Just a couple of other common ones that I see. Any amount over the exemption, less employee contributions, must appear as taxable wages in boxes 1, 3, and 5. So dependent care FSA must appear in box 10 on the W-2, so this box here, no matter what the amount is, whether it's under $5,000, over $5,000, even including the employee contributions, the whole amount must appear here. Only the amount over $5,000, because that's what the employee, or that's what the IRS has determined was exempt, needs to appear as taxable wages in boxes 1, 3, and 5. Medical FSA is exempt up to $2,500. Again, anything over that threshold is now taxable. Adoption assistance is exempt from income tax but is taxable for Social Security and Medicare, and it also needs to be reported in box 12 with a code T. Education assistance is exempt for $5,250. The employer gives the employee anything more than that for additional schooling, it is considered taxable wages and needs to be added to all 3 boxes. Transportation benefits, there are thresholds by the type of transportation benefit. I should have corrected this. I apologize. These are monthly amounts. Everything else is annual. These are monthly. So just be aware of that. And mileage here at the bottom, this is what the IRS has determined is acceptable, 56.5 cents per mile for business travel. Anything that you pay your employee above that threshold is taxable. The special accounting rule. The IRS understands that the value of some non-cash fringe benefits cannot be immediately determined, so they've granted us a grace period. The IRS allows employers to treat certain benefits provided in November and December as being paid in the next year. Employees choosing to use this special accounting rule must notify employees of this before January 31st or when the employee receives the W-2, whichever is earlier. If the employee is using this, if the employer is using this grace period, it must apply to all employees using that benefit. So they can't pick and choose employees and say for personal use of company car, just report some employees in 2013 and some in 2014. If you're choosing to use this grace period for a benefit, it applies to all employees subject to that benefit. And then lastly, the special accounting rule cannot be used for the transfer of property, taxable moving wages, or group term life. And that is all I have today, actually. I tried to make it quick for you because I know it's a holiday week. Anybody has any further questions, please feel free to send me an email to the year-end box. So it's just yearend@tompworks.com, and I would be happy to go over any questions that you might have. Otherwise, have a great day, and I look forward to seeing you all next week, Monday the 30th. We have a brand new moving wages tool that's going to be really helpful for everybody, I think. So I hope to see you all then, and have a good week. Thanks.